Welcome to the Deep Dive, where we cut through the noise to give you the clearest picture. Today we're digging into the recent Q4 and full year fiscal 2025 results for Lantronix. They just came out on August 27th. Our goal here is pretty simple. Pull out the key insights, understand where management is taking the company, and get a feel for the market reaction as Lantronix pivots into some new, potentially high-growth areas.
Let's jump right in. So kicking things off with the results snapshot. It was a bit of a mixed bag for Q4 fiscal 25, wouldn't you say?
Yeah, definitely mixed. Non-GAAP EPS, the adjusted earnings came in at a penny. That was just slightly below what analysts expected, which was 0.01 till.
Had a slight miss there. And the GAAP number.
The GAAP EPS, well, that showed a loss of 0.07 cents for the quarter.
Okay. But revenue was a different story.
It was. Revenue actually beat expectations. They reported $28.84 million, whereas the consensus was closer to $28.53 million.
So a beat on revenue, but, and this is the big number that jumps out, that revenue figure is way down year over year. Yeah, a huge drop, 41% lower than Q4 of fiscal 2024. That's quite significant.
It really is. But interestingly, despite that massive revenue drop, their non-GAAP gross margin actually went up.
That's right. It climbed to about 40.6%. That's roughly 180 basis points or 1.8 percentage points higher than the same quarter last year.
Okay, so we absolutely need to unpack that revenue decline. What's the story behind the 41% drop?
Well, the crucial context here, and management was very upfront about this, is the Gridspertise customer.
The big EU smart grid project.
Exactly. That project was huge for them in fiscal 24, about 25% of their total revenue, actually.
Wow.
And they knew it was rolling off. So Gridspertise delivered just over $11 million in the first half of fiscal 25, but then, as planned, basically minimal revenue in the second half.
So that 41% decline, while jarring, wasn't exactly a surprise internally. It was an expected transition.
Precisely. It largely reflects that planned, managed conclusion of a major project.
That's really important context. So if we mentally subtract that Gridspertise impact, what does the rest of the business, the core business, look like? Was it holding up?
Yeah, that's the key question, right? And the answer seems to be yes. If you strip out Gridspertise, Lantronix's core revenue actually stabilized in the back half of fiscal 25.
Stabilized, okay.
And even better, it showed a sequential increase in Q4 compared to Q3.
So beneath the surface of that big year-over-year drop, the underlying business is finding its feet and maybe even starting to grow a bit again.
That's the indication. It suggests the strategic pivot is starting to gain some traction in other areas, which is exactly what you'd want to see.
Okay, that makes sense. Now let's go back to the gross margin. It was up year over year, but you mentioned it dipped sequentially in Q4. What caused that dip?
Yeah, sequentially from Q3 to Q4, there was a dip. Management pointed to a couple of temporary things.
Like what?
Some inventory charges for older stock and also higher duties and tariffs they had to pay during the quarter. Kind of one-off hits.
Got it. So temporary factors. What's the outlook for margins looking forward? Are they expecting a recovery?
They are. They sounded quite optimistic, actually. They're projecting gross margins to bounce back into the 44-45% range in fiscal 2026.
That's a pretty significant recovery. What's driving that confidence?
It's mainly ongoing cost initiatives and supply chain improvements. And a big piece of that, which is quite strategic, is shifting manufacturing for most of their U.S.-bound products out of China.
Mitigating the tariff risk.
Exactly. It helps avoid potential tariff hits and should lower costs overall. It's a proactive move.
Smart. So they're working on margins, managing the Gridspertise roll-off. How about operational discipline?
Yeah.
Cash flow, inventory, the balance sheet, are they getting their house in order?
Traditionally looks that way. Operationally, they were disciplined. They generated positive operating cash flow in Q4 and for the full fiscal year, too.
How much?
Totaled $7.3 million for fiscal 25. And they brought down their net inventories pretty significantly, ending the year at $26.4 million. Shows better working capital management.
Good signs. And the balance sheet health, debt, cash.
Looking stronger there, too. They finished the quarter with $20.1 million in cash and equivalents. Plus, they paid down a decent chunk of their term debt, about $4.5 million, which was like 28% of what they owed.
Okay.
And then just before the call, they refinanced the rest of that debt into an asset-backed line of credit.
What does that do for them?
Couple of things. It lowers their interest payments, which is always good, and it pushes the maturity date out to August 2028. Gives them more breathing room.
So net, where does that leave their cash position?
It leaves them with a net cash position of $8.3 million as they head into fiscal 2026. Much healthier financial footing to execute the strategy.
That's quite a cleanup effort. Okay, looking just ahead, what do they guide for Q1 fiscal 26 earnings?
For Q1, they're expecting non-GAAP EPS between $0.02 and 0 to 4 cents.
All right, let's pull back now and look at the bigger strategy. Management called fiscal 25 a year of strategic transformation. What does that actually mean on the ground? Where are they trying to pivot?
It really is a pivot. They're talking about streamlining operations, yes, but more importantly, making very focused investments and shifting their whole product mix towards higher margin areas.
Higher value stuff.
Exactly. They use the phrase innovation pulse, saying it's now centered squarely on defense, edge AI, and private 5G, moving away from maybe lower margin commoditized areas.
Defense is a big one you mentioned. Drones, unmanned aerial systems, UAS, that seems like a major part of this new focus. Tell us about their involvement, especially with Teal drones.
Yeah, this is definitely a highlight. In Q4, they actually started production shipments for Teal drones, Black Widow SRR program.
SRR?
Short-range reconnaissance, think small tactical drones for the U.S. Army.
Okay, so defense applications. What's Lantronix providing? What's their edge?
It's not just one thing. It's their camera expertise, the advanced tuning they can do, sensor fusion, combining data from different sensors, complex software integration, and crucially, they're NDAA and TAA compliant, meaning they meet strict U.S. government and defense procurement standards, partly because they're a North America-based supplier. And the Teal Black Widow itself is a Blue UAS-approved platform.
Which is a big deal in defense circles, right? Signifies trust and security.
A very big deal. It's like a seal of approval, especially important given concerns about technology sourcing.
So specialized, secure solutions. How big could this drone market be for Lantronix? Are we talking niche or something substantial?
Potentially quite substantial. Management said they're working with over 10 different drone manufacturers already, mostly military or industrial focused.
Okay.
And the average value, the dollar content Lantronix provides per drone, is around $500.
$500 per drone. That adds up quickly at volume scale.
It really does. They're projecting that the drone market could become 10-15% of their total revenue by fiscal 2027.
Wow, 10-15%.
And they expect millions of dollars in revenue from it just in this coming fiscal year 26.
Are they only focused on defense drones?
No, they're also playing in the commercial space. They mentioned a partnership with Aurora and Teledyne FLIR for edge AI imaging.
Edge AI processing AI on the device itself.
Exactly, combining Lantronix's compute module with thermal cameras and AI software for things like autonomous flights, surveillance, industrial inspection. They expect revenue from that starting in fiscal 26 too.
Okay, so drones are a clear growth pillar. What about the other areas? Network infrastructure modernization.
Another key strategic focus, they landed a multi-year deal with a Tier-1 U.S. wireless carrier, a major one.
What's the deal involved?
They're providing devices and services to upgrade the backup power system at over 50,000 wireless cell sites.
50,000, that's a lot of sites.
It is, and critically, it's not just hardware. It includes their perception platform.
Which is?
Software for remote monitoring and management. And importantly, it generates annual recurring revenue, ARR.
Ah, the magic words. Sticky, predictable revenue.
Exactly, highly valued. And management even hinted this initial deal could grow to be at least 3 times bigger over the next couple of years.
3 times. Plus the ARR. That sounds like a potential game changer.
It could be very significant. Plus, they just launched a new product line in this area, too. The NTC 500 5G router series.
Aimed at what market?
Private 5G networks and edge connectivity. Think of factories, campuses, venues wanting their own secure, high-performance 5G network. It extends their reach into that growing market.
So major wins in drones and network infrastructure. What about internally? You mentioned cost cuts earlier. Any other operational improvements supporting this shift?
Yeah, the cost reductions were significant, over $4 million saved compared to fiscal 24. The manufacturing shift out of China is part of that. They also fully integrated the Netcom IoT acquisition they made, and they highlighted deepening their partnership with Qualcomm.
Qualcomm, for what?
For edge IoT and AI-driven stuff. Leveraging Qualcomm's tech helps boost their capabilities in these key growth areas they're targeting.
Okay, they've definitely been busy laying the groundwork for this transformation. Let's talk outlook again. You gave the Q1 EPS guidance. What about Q1 revenue?
For Q1 fiscal 26 revenue, they're guiding for a range of $28.5 million to $30.5 million.
And full year guidance. Did they offer anything for fiscal 26?
No full year guidance yet, but management did say they have improved visibility for the year, largely because of the momentum they're seeing in these new strategic pillars, the drones, the carrier deal, and so on.
Right. So looking at the broader landscape, what industry trends are working in their favor? What tailwinds are they hoping to ride?
There are definitely some strong tailwinds. The whole unmanned systems market is booming, especially in defense. You mentioned the DoD earmarking over $13 billion for unmanned platforms in 2026. That's huge.
Oh, rising tide there.
Absolutely. Plus, there's increasing demand for secure U.S.-made technology, which plays right into their NDAA compliance and North American base. And then you have the broader expansion of private 5G and edge AI adoption. They also mentioned robotics opportunities, possibly starting to bubble up early next calendar year.
Sounds like fertile ground.
Mm-hmm.
But it can't all be smooth sailing. What are the headwinds or risks they're still navigating?
True. Management was realistic. They acknowledged the overall hardware-focused IoT market can still be choppy. Project timings can be lumpy. Some customers might still be working through excess inventory destocking.
So near-term lumpiness.
Potentially, yeah.
Yeah.
And the tariff and trade policy risks, while they're mitigating them, remain a macro factor they have to watch.
Okay, so putting it all together, the Gridspertise roll-off, the pivot, the new wins, the guidance, the tailwinds, the risks. How did the market react initially? You said trading was volatile?
It was volatile after hours, even though they beat on revenue. It points to a kind of neutral to cautious sentiment from investors right now. Meaning the market sees the strategy, they acknowledge the good execution on pivot towards defense and edge AI, and the near-term guidance shows stability. But they're still in show-me mode.
They need to see the proof in the numbers long-term.
Exactly. They want sustained evidence of top-line growth reaccelerating now that Gridspertise is gone, and they want to see those gross margins consistently expanding as promised. They need to see this strategy really translate into consistent financial performance before, fully buying in.
Makes sense.
Yeah.
So what should people be watching for? What are the potential catalysts that could shift that sentiment from cautious to maybe more bullish?
Several things. More defense contract wins would be huge, obviously. Seeing a clear ramp up in production volumes for that Teal SRR drone program.
Proof that drone strategy is scaling.
Right. Also, further wins in commercial edge AI and private 5G, especially if they involve that new NTC 500 router. The actual gross margin numbers will be key. Do they hit that 44-45% target despite component costs or any lingering tariff issues?
Learn and execute.
Definitely. And of course, any future updates to guidance for the rest of fiscal 26 or beyond will be watched very closely. Oh, and that cooperation agreement they mentioned with an investor group, Chain of Lakes, suggests ongoing shareholder dialogue, which is also something to keep an eye on as they navigate this pivot.
All right, let's shift gears now to our This Is Not Financial Advice segment. Imagine we're kicking around some ideas, maybe a little wild but plausible based on everything we've heard. The market's cautious, right? That show-me attitude can create interesting spots if you believe in the turnaround. Okay, idea number one. Let's call it the Blue UAS bull case. My thinking here is Lantronix has real traction in defense drones, especially with Teal and that Army SRR program. It's high-margin, secure, NDAA compliant stuff. They're working with maybe a dozen drone makers, $500 a pop in content. That's significant potential.
And the market maybe doesn't fully appreciate that specific angle yet.
Exactly. I think the market still lumps LTRX into a broader IoT category, not this specialized defense-grade edge AI provider. If those drone programs really scale up, especially into early calendar 26 like they hinted, we could see a real re-rating.
So how would you play that thesis?
Well, again, not advice, just spitballing. Maybe something leveraged, like perhaps looking at call options, something like a LTRX January 2026, $4.05 zilsas, $6.50 bull call spread.
Okay, defined risk, defined reward.
Right. Limits the cost, gives you upside if the drone story really takes off and the market catches on by early 26. It's a bet on them becoming recognized for this mission-critical tech. Okay, second thought experiment. Let's call this one the carrier cash cow covered call. That Tier-1 wireless carrier deal, I think it's a sleeper.
The backup power modernization one.
Yeah. Over 50,000 gateways, sure, but the key is the perception platform software. That's annual recurring revenue, high margin ARR, and they said it could triple in size.
That recurring revenue piece is often undervalued initially.
Totally. It's predictable, it's sticky, it's in critical infrastructure. So if you already hold LTRX stock, maybe you play this more patiently.
How so?
Maybe sell covered calls against your position. For example, selling the LTRX March 2026 $4 or $4.50 covered calls.
Generating income while you wait.
Exactly. You collect premium now, capture some moderate upside if the stock drifts higher, but you acknowledge that the full impact of that massive carrier ARR will take time to show up on the bottom line. Kind of monetizes the waiting game.
Interesting ideas. Both really zero in on those key future growth drivers. We talked about the defense drones and the sticky network infrastructure revenue. It's about looking forward, not back at the grid's era.
So let's wrap this up. To recap, Lantronix is very clearly in the midst of a major strategic shift. They're moving towards higher margin, high growth areas like defense drones, edge AI, and critical network infrastructure.
Right. And while Q4 saw that big revenue drop because the Gridspertise project ended, they did improve gross margins year over year, showed good operational control, and crucially, landed those potentially transformative deals with Teal drones and the Tier-1 wireless carrier.
But the market reaction is still cautious, sort of waiting for more proof that this pivot will deliver sustained growth and profitability over the long haul.
Exactly. The show me story continues.
And just a reminder, as always, this discussion and those trade ideas we brainstormed are purely for informational purposes. This is absolutely not financial advice.
Definitely not. Always do your own thorough research, your own due diligence, and consult with a qualified financial advisor before making any investment decisions. Investing involves risk, including the risk of losing your money.
Well said. Now, before we go, here's a final thought to chew on. As Lantronix deliberately positions itself deeper into national security supply chains and critical infrastructure upgrades, is it essentially morphing from just another IoT company into something more like a key supplier within, let's say, a digital defense industrial base? And if so, what might that mean for how you think about its long-term value? Something to consider.